Francois Savary, good morning, welcome, and thank you for joining us. Obviously, it's a busy week ahead in the markets. There's a few things we need to go through. Let's
Um,
start with the economic numbers calendar. What are you looking at most this week?
I would say that you have different elements in Europe which are very important. First, you have the CPI data, and that they will be released for Germany and France. I think that you have the GDP data coming out for the
Germany.
different country, Germany, Europe in general. Those numbers will be watched very closely to my point of view because they will define if people increase the prospect of a recession in the second part of 2023 in Europe, or if they stick with the view that maybe we are going to go through a phase of very slow growth but no recession. I think that you have very, very important number in the US at the end of the week. Non-farm payrolls, the key one. People want to see if there is a slowdown in the labor market in the US. And in this regard, I think that people also need to take a look at what will be published concerning productivity in the US and the unit labor cost. It will be published, I think, on Thursday, and those numbers are very, very important in the medium term to decide if the inflation risk is receding as much as people are expecting. So, and then you have China. China, you will have very key figures because we all know that there are some green shoots coming out of China. Is it going to be confirmed through the PMI numbers? I think those numbers are very, very important. The same way in the US, you will have manufacturing ISM that will be published. The number is going to be watched very closely because there was a rebound in the last publication. Is it going to be confirmed? Is it the end of the industrial recession in the US? So a lot of number to go through this week in terms of macroeconomics.
Okay, obviously the Fed on Wednesday. Are you expecting anything? Are you expecting a hold
I expect a hold.
of the market? Yeah.
Yes, I think that the market is right. You know, when you see that the tightening of financial condition that happened during the summer in the US, I think that the Fed would be very wise not to hike interest rates, to keep a kind of hawkish command, but nevertheless not to act on interest rates because the bond market, to a large extent, is doing part of the job of the
Mm.
Fed in terms of tightening the conditions.
Yeah, yeah. Okay, perfect. Something that caught my eye, the market's not really talking about it very much. Obviously, the market is looking at the spread between Germany and the Italian 10-year. There's a 10-year auction on Tuesday. Is that something, do you think, that's going to be significant?
I'm not sure that it's going to be significant. It's something everybody should watch, but nevertheless, I don't expect that there will be a very negative reaction. Nevertheless, there is one point concerning issuance that is very, very important, is what is also coming on Wednesday in the US. On Wednesday, the Treasury is going to publish its financing needs for the coming quarters. I
Mm.
think that this is going to be watched very closely. Remember that when they did that, the last time. This was one of the reasons why the bond market suddenly turned around and went through a very bad summer. So I think that those numbers are very, very important because also it tells you a lot about the budget deficit in the US. And it's a worry that the investors have increased or have reinforced over the summer. And I think that I will look at those numbers more than the one concerning the Italian BTP.
Okay, all right, perfect. Petroleum has been remarkably subdued since the conflict in the Middle East. Are you surprised about that?
I am surprised. I'm partially surprised, but what I would say it was volatile. It was, I would say, on an uptrend, a little uptrend, but not the one maybe you would have expected, considering that the geopolitical situation is very tense, and you have now Iran is coming out saying that Israel is crossing the red line. So I agree with you. It's something that is surprising. Nevertheless, don't forget that we came out with the International Energy Agency came out also with a report last week concerning the fact that demand will progressively be subdued concerning oil. So this has maybe impacted in the short term the behavior of the Brent prices or the VTI.
Okay, you think part of the lack of reaction might be as a result of some people in the market expecting slower growth?
I agree. I agree with you. It is also potentially one of the reasons. Oil is something that is, I know, it's a safe haven when you have geopolitical issues, but it's also a very cyclical asset. And there is a lack of visibility in terms of where we are going in terms of growth. If the geopolitical situation deteriorates further, I think that it will have an impact on economic activity. And so that's maybe the reason why there is no big jump on oil prices for the time being.
Okay. Well, something that has reacted to the crisis in the Middle East is gold, even if petrol didn't. So um, we're very close to the highs on gold. Do you think we can break through the triple high and go much higher and start a new range?
It's quite possible. I think that, but you need to put that into perspective. Remember that end of last year, early this year, gold was very strong. Then it suffered a blow. You had gold prices going down. We went back, I think, towards 1,850. And with the crisis and the Israeli crisis, the Gaza crisis, it went up significantly. Logical, because you have a safe haven status of gold. Moreover, there is something that people need to keep in mind. You have a lot of rumors about the fact that central bankers are buying gold again.
Hmm.
When, as you mentioned, we are back to levels that we saw earlier. So central bankers were looking for an opportunity, an entry point. So the consolidation gave them some opportunity to increase their position, it seems. And as I said, safe haven plus the fact that you have demand from central bankers is something that can bring you into a new range for gold prices, extending maybe the range between 1,950 towards 200 and 2,150. So the range is pushing up to my point of view.
Okay, so you're not one if it does break out of the 2060 level or around that point, you're not expecting a huge reaction once it gets through those resistance levels.
I know it depends. You would have the combination again. You would have the combination of a very unsettled situation in terms of geopolitics and gold purchase by institution or by the central bankers. So I think that they are doing the job right now. They are not going to purchase gold at any price. So no, I don't think that it's going to 2,500 in a matter of a few weeks or few months. No, I would still hold gold in a portfolio. I believe that an investor should have a gold exposure in a portfolio.
Okay, perfect. What trades are you looking at this week? What's caught your eye, and what are you following?
I think that you have different elements that you need to have in mind. First, the forex and the currency market. I think that there you have something that is happening. You had a lot of support for the US dollar. I am not convinced that the strength of the US dollar is going to continue. I think that we are reaching close to a bottom versus the euro. I'm not defending the idea that you will go to parity again. So I think that's something I would take a look at, trying to develop some strategies that would allow to benefit from the fact that the US dollar is not going to appreciate significantly from there. Also, what is very interesting is what is happening with the yen. The yen is very weak. You have more and more remarks by Japanese authorities that people need to be careful. There should be some caution that they could act and etc. I think, and I was wrong on that. I thought that the yen would be much stronger this year. I think that this is also something maybe that is cooking. So I would take a look at that. I think that for the medium term, people should look at bonds. We also the declaration of Mr. Ackman last week, turning his short position on Treasury. I think that this is a wise bet for the next 6 to 12 months because I consider that the economic activity in the US is going to slow down and that it would support the bond market. I think that you have interesting opportunities in credit again with 6 to 12 months horizon. I think that there you should take a look. I would not go for high yield. Be careful with high yield because as I said, the financial conditions are deteriorating quite extensively. So I would not touch high yield for the time being. And this week I will look at Swiss Re. Swiss Re is a company that is providing you a very interesting dividend yield. high single digit. I think it's very interesting to consider high dividend stocks in an environment in which if you believe that bond yields have reached a level that is not going to constitute a step higher. It's going to be a kind of top on the bond yield. And it's very interesting to look at dividend yields. Swiss Re is publishing his number on Friday, I think. This is a stock providing you with a very, very high dividend yield. I think this is very interesting for an investor who wants to have some interesting trade in a portfolio for the medium term.
Okay, well, where would you be accumulating Swiss Re? At what price level?
I think that the stock has been quite volatile. I think that around the 85 level, you can consider an entry point as interesting.
Okay, all right, perfect. Francois Savary, we covered quite a bit now. I think we've run out of time. I'd like to thank you very much for joining us, and I hope you'll be joining us very soon.
You're welcome. See you soon. Bye-bye.
Bye-bye.